Hey guys, welcome back. In today's video, we are talking about the AMC games, how shorts are out of ammo, why it is time, and many more in this video. Firstly, we're taking a look at this. Firstly, 70% dark pooled for AMC. What you're looking at once again is how the volume is being stolen away from us. And this is just starting the week off. So we can already see that AMC was down 2.71%. Now, AMC was on a very good track considering the fact that on Friday, when we saw $1.6 trillion being wiped out, AMC was able to stay green. And the shorts were aware of that. They realized how well AMC is able to survive in those scenarios. And you can already see them starting this week off with as much manipulation and suppression as possible. And so this week already we're down 2.71%. But when you consider the fact that we are seeing over close to 70% in off-exchange volume, you should understand just how worried these shorts are, but also just how much allocations these shorts are using in order to suppress AMC. And so this is what we have to understand is that yes, AMC may not be going up the way we want it to be, but we are definitely seeing how it is affecting short sellers, because if it weren't affecting short sellers, we won't be seeing this off-exchange usage as high as 70%. Another reason, they're still shorting AMC with over 50 million shares while calling it dead. If it's so worthless, why work so hard against it? 10% of the float shorted, 3.8 days to cover, dark pools hiding the rest. So we've already talked about the dark pools. Another way you can look at the suppression, the manipulation, and just how worried the shorts are is of course with data like this. One of the things we've talked about is how, once again, the short data that we are viewing, as always, is the very minimum. Because it's self-reported, because it doesn't include all these offshore firms as well, what we are looking at is the very minimum. And the very fact we're still looking at over 50 million shares, understanding the fact that firstly, there are over 550 million shares unsettled in the DTCC. Secondly, there are hundreds of thousands, if not tens of millions of FTDs that are out there that don't exist, yet we've seen them in the past. You know, these things that are all there shows just how much AMC is being shorted. And so when we're taking a look at what's happening, when we're taking a look at all of this data, you understand just how worried these short sellers have been and why they continuously try to suppress AMC. And so this is obviously another indication of what's going on in the market. Now, there's no surprise they are doing this, because when we take a look at this, Disney's Tron Ares debuted with 33.24 million domestically this weekend from 4,000 locations. So what we are seeing right now is the box office is still thriving. Now, we talked about the Taylor Swift movies already, and we've talked about why it's not good for AMC, just not good for AMC in terms of the fact that it's not only good for the box office, but it's also good because AMC film distribution was also behind that. So that's why it wasn't just good for one purpose, but actually multiple purposes. Another thing is just looking at that the overall box office is still doing well, and it will continue to grow in the future as well. And so with this, what you will expect is firstly, AMC to be profiting from the improvement of the box office. And we've seen how they're restructuring their debt. We're seeing how they are improving their business structures. And then secondly, going into the future, we're going to be seeing more opportunities with AMC film distribution that will obviously allow them to grow even higher as well. So multiple areas where AMC is able to do extremely well. Another factor on top of this, Hycroft continues to show strength and add to AMC's revenue. And so this is what we are looking at, AMC's investments. And you can see, reminder that AMC had over 7 million in gains in Q3 on just the shares, excluding the warrants. And as of now, almost another 4 million this quarter, with a way to go, of course, and also not counting warrants. It should add a bit into the revenue in each quarter. We love to see it. And so this is what we are seeing with AMC's investments as well. And this is why we've said, if AMC is able to raise a lot more money, they are able to do so much. We've already talked about it. If AMC were to have an even bigger cash pile than they do now, like GME does, what you can be looking at is firstly how they're able to pay off their debt, and we talked about how good that will already be for AMC. We're then going to be seeing how well they can invest into their infrastructures, We've already seen how the previous investments in their infrastructures has optimized their business structures, has allowed them to make more money even if the box office weren't to do as well or equally. Now, we're also seeing that if they had more money, they're obviously able to make more investments, which will give them a bigger return. Remember, they were able to make 7 million in gains. Now imagine the gains they would have made if they had even more money. And this is the opportunity that they are proposing right now. Furthermore, you can see, we just talked about how AMC is applying all of the stress on short sellers right now. We can see that whether it's through the fundamentals, once again, whether it's with the box office, we're seeing it with the short data, we're seeing it with the dark pool, but GME is also doing the same. You can see the lens pools are very telling of exactly what's going on with GME. 1.4 million GameStop shares borrowed, controversial ETF, the retro machine GMEU, with only 200 shares left. The primary vehicle XRT has nothing left for a full week, almost fully out of ammo. So when you take a look at this, we've seen with some of the things they've done. So firstly, the fact that they're borrowing more GME shares, especially as we're seeing this warrant issue that has exposed so many brokers of the fact that they don't have real shares, they're offering synthetics, hence why they can't get the warrant. We're seeing more and more problems being exposed, and that's why they need to borrow shares. Firstly, the GMEU, the fact is only 200 shares left should already show you just how much shares needed. But more importantly is the fact that when we take a look at XRT and the fact that 1.4 million GameStop shares are borrowed, you truly understand just how desperate they are. And if we look at XRT, once again, a fund that's being used to short AMC, to short GME, to short along with all of these other ETFs that exist out there, you can see the fact that if it has nothing left for a full week, it just really highlights how much shares needed by these short sellers. Once again, at a time where the GME warrant has been exposing all of these short sellers, it truly is interesting that they're suddenly in need of so many shares. Furthermore, we've talked about this. Another reason for why they are worrying right now is because of the fact that AMC and GME 13Fs both at all-time highs. And we talked about how institutional accumulations have been going up. And this is why you shouldn't believe all of these news articles that are out there. Because when you take a look at the majority of the news articles, most of them will be telling you to sell your AMC shares, to sell your GME shares, to never buy AMC or GME. But on the contrary, what you will see is that these institutions are not following these articles, but rather they're buying, not only buying AMC and GME shares, but actually buying more than ever. And that should just show you how undervalued AMC and GME is, and just how sought after it is, not only from the retail, from the apes, but from the institutions as well. Another thing you can see, it is time. As we're taking a look at this, Bloomberg just quietly dropped a new tag on GameStop. It's like some secret boss level just unlocked. And now we have to understand is that the code isn't random. It's a global reclassification marker used when the equity gets recognized as a new or modified instrument across clearing systems. And so this is what's happening. Once again, what you'll see is that there have been so many things happening in the market right now, and most of them has got to do with either AMC or GME. When you take a look at most of the changes that have been happening, you'll realize that this would have been triggered by either AMC or GME. And so for those of you who are saying that AMC and GME isn't posing a threat in the system, well, firstly, remember, look at the warrants. Secondly, look at the institution accumulation. And then when you take a look at some of the firms who've been asked to increase their margin requirement, to decrease their risk exposure, are all coincidentally short sellers of AMC as well. And so this is what we've said, when all of these things are linking together, you can't say it has nothing to do with AMC and GME if AMC and GME is just a common factor in everything that's been going on in the market right now. Another big thing is the crypto liquidation the warm-up? And so we've already seen recently what happened with the crypto market, how it had a massive drop. You have to realize that what just happened in crypto is nothing compared to what can happen in the global financial system, since the very same has been happening for years. So you can imagine what happened in the crypto market, but happening in the overall the overall stock market, and that will wipe out so much more money than you would expect. And it's no surprise, because you can even see Goldman Sachs CEO says there'll be a stock market drawdown and people won't feel good. But I think it will be even bigger than that, because when we take a look at the fact that if they're seeing a drawdown, most people will think it's the market crash, and that will truly trigger a sequence of people covering their positions and fully causing the market to go down. And that's why everyone's trying to position themselves safely and accumulating as much AMC and GME as possible. Now, as always, none of this is ever financial advice, so do take our second consult, make sure you do your own due diligence and research, and I'll catch you guys next time.